Yeah.
So depressing to
Not
hear.
so good news for us, and we're seeing this happening after 2009, since 2009 in fact.
Yeah, well, Colin's on top of that story. Let's find out if there isn't some hope at the end of this. Colin?
Well, Peter, that's for the analyst to unpack that for us, and we just need to recap as we follow on this story that has taken many by surprise, that the South African economy is officially in recession. The economy contracted by 0.7% in the second quarter. This after it contracted by a revised 2.6% in the first quarter. A recession is defined as 2 consecutive quarters of economic decline. The largest negative contributors to growth in GDP in the second quarter were agriculture, transport and trade. The agriculture, forestry and fishing industry decreased by over 29%. The decrease was mainly due to a drop in the production of field crops and horticultural products. The manufacturing industry contracted by 0.3% in the quarter, mainly due to a decrease in the production of motor vehicles, parts and accessories. The main positive contributions came from the mining industry and finance, as well as real estate and business services. The mining sector increased on the back of increased production in platinum group metals, copper and nickel. The economy will likely grow at a much slower pace this year than was earlier thought. And let's go back to our earlier headline story as we were talking about GDP. Remember, the previous quarter came in at minus 2.2% when GDP contracted in the first quarter of 2018. The manufacturing industry decreased by 6.4%, while the mining and quarrying industry contracted by 9.9%. So for more on this, we are joined by Managing Director of lehumo Investments, Maudi Lentsoane. Thank you very much for coming to our program.
Thanks for having me.
All right. Let's talk about this from the beginning of the year. Remember when you were here, you were talking about the Ramaphoria, and we asked if that was going to be sustained.
Yeah.
Where did all go wrong?
Yeah, you're absolutely right. I mean, it's 6 months sounds like a long time ago, but I mean, you know, the fact that is now the Ramaphobia has gone and evaporated into the sky, and there's certainly back to reality now. The reality is that our economy is under a lot of pressure. There's simply a number of things here, and I think what's even worrying, Colin, is the revision of the first quarter. So that means the 2.2% drop in GDP in the first quarter. That was an underestimated figure. So the actual figure is 2.6%, minus 2.6%. So it's quite a big miss. When you consider that that particular first quarter GDP was also a surprise. So it was a surprise, but it should have been even a bigger surprise because the actual number is 2.6. So it paints a picture of an economy which is under a lot of pressure, significant pressure. There are a number of things. I mean, you've seen the agricultural sector, which in the first quarter dropped, and even now dropped by about 29%. So it was a miss in the first quarter, the agricultural sector. It's now a miss in the second quarter. You know, a number of other sectors as well which have missed. This paints a picture, a very bleak picture for the country.
Here's the question. People had expected a recovery in the agricultural sector because of the rainfalls that came later than expected. Yeah. Why haven't we seen those numbers then factoring into the recovery of this sector and the other ones?
Yeah, look, there were other disruptions in the second quarter. And remember, with the agriculture, while you can expect a recovery, there are a number of unforeseen circumstances that might happen. And I think in this particular numbers, in the second quarter in particular, is that you had some disruptions, some hailstorm in Mpumalanga area, which caused a lot of disruption in the agricultural space in that area. But you've also got the recovery in the Western Cape, even though we've seen the drought, you know, improved, good rains coming through in the Western Cape. That was delayed. You know, that also caused a little bit of a delay in that recovery. So I think the agricultural sector, I am positive that that contribution will only be evident in the third quarter. I do think that even though we've had a negative quarter, in the second quarter. I think the third quarter will be much better when it comes to the agriculture, because a lot of things have actually improved.
Now, this came in as a surprise. The mining sector at 0.4%, just a slight improvement. But can this be sustained?
Look, it can only be sustained if we completely eradicate or deal with all the uncertainty, all the outstanding issues within that sector. For example, we've still got the mining charter, which still hasn't been finalized. We need to create an environment which is conducive for investments to come into that sector. The fact of the matter is there's still so much uncertainty in that sector. Combine that with what is happening globally, and I do have to say that a number of these negatives that we are seeing is partly to do with the things that we are doing wrong as a country, but also to a larger degree the uncertainty that has been created in the world. You talk about the trade war. There's a lot of uncertainty there. I mean, if we begin to see quite an aggressive trade war, a fully fledged war in terms of trade, that could actually further impact negatively on our.
Are we likely to see some spin-offs from President Ramaphosa's charm offensive to try and get investors into the country, and the recent activity of interacting with the African continent as well as China?
There is hope there, and especially when you hear about the commitments that have been made, lots of monies, billions and billions of investments that has been committed. However, we've got to now move from just the talk of the intention of China to invest in Africa. We've got to begin to see that actual investment coming into the continent for us to begin to see the improvement in our economies.
Now, going forward, before I ask you about the South Africa's bad tendencies of importing more and exporting less, before we get to that, I just want us to talk about the concerns of the consumers. They want to know what's going to happen now. How will they be affected?
Look, the situation is still very difficult. I think the consumer will remain under a lot of pressure. I mean, you take just the petrol price, I think the inflation will also come under pressure. I mean, you look at the rand has now shot up above 15 rand. That's very inflationary. I think this will certainly cause a lot of headache on the Reserve Bank. It's a Reserve Bank which will now be looking to perhaps do something about this runaway inflation. It's certainly going to be very tough for the consumer going forward until such time that we begin to see some positive improvements on our economy.
Right. So going forward, our import-export ratio has been very, very dismal. And when you look at the South Africans' current account deficit as well, it has actually been on the downside. Now, we hear the report saying that our exports have increased slightly by 13.7% and imports have increased by 3.1%. What do you make out of these in especially trying to get a trade balance?
Look, it's a manufacturing. You just look at the numbers that we had, the GDP numbers. The manufacturing sector is simply not performing at the rate it should be, and that's partly part of our problems into that deficit, trade deficit number. And if we can work on the manufacturing sector and have improved productivity in that sector, and make sure that sector comes back and go back to the yesteryears when it used to contribute quite significantly into our GDP, then we'll begin to see an improvement in our GDP. But until at the moment, we've got a sector which is under a lot of pressure. The mining is under a lot of pressure, and the mining and manufacturing, they feed off each other. We need an improvement there to begin to see a good recovery in our GDP.
All right. Thank you very much for making time to speak to us, sir.
Thank you.
All right, that's Maudi Lentsoane, who is Managing Director of lehumo Investments, bringing us to the end of this review of the unpacking South Africa's recession. And we're going to link to Peter now so that he can give us some sporting news. Peter.